Intrinsic value, as the legendary investor Warren Buffett puts it, is determined by the future cash flow discounted to its current value. In simpler terms, we need to understand a company's business, project its future earnings, and then discount those back to calculate the stock's current value. Let's break down the steps to calculate intrinsic value. This process involves a careful examination of a company's financial health and future prospects, ensuring you make informed investment decisions. Understand the business. Projecting future earnings. Discount back to current value. Calculate stock prices. Now, let's delve deeper into each phase. Understanding the business is like peeling back layers. Analyze industry position, competitive advantages, and management capabilities. This provides a thorough grasp for more accurate future earnings projection. Projecting future earnings is key. By examining historical financial data and considering growth factors, investors anticipate a company's future cash flows, vital for evaluating long-term viability. Now, discounting involves factoring in the time value of money. This critical step determines the present value of future cash flows, ensuring a realistic evaluation of a company's intrinsic value in today's terms. Our ultimate goal: calculating stock prices. Take the discounted present value of future cash flows, arriving at a fair value. By comparing this to the market price, investors identify opportunities, understanding if a stock is undervalued or overvalued. Now, what's the benefits of calculating intrinsic value? Calculating intrinsic value uncovers hidden gems, helping investors spot undervalued opportunities others might miss, a compass for potential market treasures. Also, with the intrinsic value insights, investors make informed choices, minimizing the impact of market swings and emotional decisions. It fosters a strategic and disciplined investment approach. Intrinsic value calculation promotes a long-term focus, enabling investors to navigate market volatility. This aligns with Warren Buffett's philosophy, investing in businesses with enduring value and strong fundamentals. As we wrap up today's discussion, remember that calculating intrinsic value is a powerful tool for global investors. It guides us in identifying opportunities that others may overlook and sets the stage for a successful investment journey.